Axis study, ZS, which is soybeans, spanning 10 months, and we're using a 240-minute chart. So we're in a downtrend, we come down, we spring, we rally up. Oh, well, now technically, we don't spring because this level wouldn't be drawn. Okay, well, it would be drawn from here, and then we spring, we rally up. Anyhow, it's a weak rally, we come down pretty hard, this level holds. And we hold again before we break. We find support down here for whatever reason. We rally back. What do we notice? Resistance, resistance, resistance. So now this line's on, on our radar. Spider sense is tingling. We've got 1, 2, 3, 4, 5, 6 touches. Now don't forget, this is a 240-minute time frame. This is significant. We must pay attention. You see this S here, there is a slight violation. Now, you're probably thinking that why don't I draw it from the lows? Well, if it's from the lows, that it doesn't help us. There are no clean touches. I mean, you can draw it from here, and that's fine. Okay, but I like to draw it from here because it does contain price. And we have all this price action above us, and I like to see, I like to see what's occurred. This, for all intents and purposes, is our first level of support of the axis line, and I like to keep that in. So we continue south from resistance. We make a lower low here. Yet we hold, we rally up, and then bang. What happens? Good wide spread. That's good quality buying. And then we gap over resistance. Amazing, truly amazing. And then we continue north, and this is a monumental move. I mean, that is, we're taking off. I think we're going to the moon. That is very, very strong buying. Don't forget, each one of these bars represents 240 minutes. So 2 bars is a day. That's a very strong rally. We struggle at the highs, so we can notice for the price action. Slam down. Another weak rally, slam down. Weak rally, slam down. Then we come back down, heading towards our axis line. First touch, boom, we hold. Amazing. We rally from here. We can't go anywhere, and then we print an up thrust on this bar, and then boom, we slam right down through our axis line with a wide spread. Okay, so we spoke about that. We've had 1, 2, 3, 4, 5, 6, 7 touches, but these areas here, this buying, okay, or the gap, and the buying beforehand, validates. It validates the level as well as the touches do, and this wide spread tells us. It tells us this level is important because it's taking force to break this level. So touches are the valid, and the price action through it gives us validity. So we can count touches like 1, 2, 3, 4, 5, 6, gap, 7, hold 8, good strong price action, 9, we hold here 10. Okay. So from resistance we come down and we rally through. You can't really see this here, so I had to scrunch up the data so it could fit the axis line on our chart. But there's a gap. Okay, there's a demand imbalance. So anyway, we rally, we struggle, we come down, and what's this? We flush the lows. We shake out the market for weak longs on this bar. We won't discuss this now. We do discuss shakeouts in depth in one of our future sessions. So we continue north. What do we notice? We're making higher highs. Okay. Now, as we come back down, we can see, we can see price action curve round, which indicates weak selling, and we hold here and here. Again, our axis line is held as support. We push up, evidence of good buying. Then what happens? Very interesting. You can't continue north. We get some very sloppy trading. Okay, and we come back down and we hold again our axis line. Now at this point, we must be thinking, low, looking at structure, lower highs are being made. Okay, and then when we come back down, we need to analyze the price action around this area to see if we'd enter, because we need to pay attention to structure. Although a shakeout does indicate higher prices, and we do get there, overall from a macro perspective this looks a little suspect. So as we rally from here, we can put in this local level in here, and we up thrust this support, we up thrust both of these levels here. Okay, and this results in a move down. This up thrust propels the market south. Take a look at this move. Okay, this is interesting. Okay, it's a solid, strong move down. Can you see how nice that price trends downwards? We have a lovely trend channel in place that price adheres to. It's not a slap bang down selling like this, or nice big wide bars like this. This is a slow grind. Okay, it gives no opportunities for the bulls to get on board. It's constantly selling, and we grind through and break our axis line. Now you see this little box in here. Okay, let me just draw this a bit bigger for you. It's like this. We're just churning up and down at our axis line. And what is that? This is where demand should emerge. This is our axis line. When we come down, we should touch maybe a couple of times and then rally. But we're not here in this box. We're touching and we're unable to go anywhere. The sellers, the price is stalling. The sellers are capping upside progress. Okay, anyway, we get a good strong move down with bulls having no ability to rally from here, and we make a low. Now what happens? Our axis line should now turn as support, should now turn as resistance, as it was support. And we can see a hold here, here, and here. This truly is fascinating. This is 13, 14 touches along this axis line at the moment. Now we come down at the lows. What do we see? Good wide spread up bar. We push through our axis line, come back down, and we spring and we take off. We do gap down. There's a gap here, so we do gap through our axis line. But this is a 214-minute chart. If you think that every 2 bars is a daily bar, or there could be a few I think about 5 bars here, or a week. That's a weekly spring. So it dips under, reverses to close firm, and takes out the gap. So for all intents and purposes, on a using multiple time frames, that is a spring. And then we come back to test for supply because there was this imbalance, and then we take off. I think this goes up to test these highs. I can't remember. This is a lovely study of what an axis line is. They are very important lines or areas on a chart because they provide excellent opportunities. They are more effective than support and resistance. Why? Because much trading, all this trading evolves, is around this. Much trading has passed through this levels. Okay, there's all kinds of different types of traders that are active in this area. And that's very important. And don't forget, we look for validity with touches as well as widespread action. Okay, so when you find these critical areas on whatever time frame, say we have support, resistance, and then we break through on a widespread validity, a widespread bar giving it validity. when we rally back and we can see that price action is weak, okay, we want to take the first rally, the first trade. You know, we don't even have to buy it, wait for a touch. If we can see a strong move down, given validity, and we see a weak rally, just take the trade. You know, obviously you do want to see narrow spreads, you want to see volume decline, you know, weak buying. We don't just buy it, okay? But this is why axis lines are important, especially if you swing trade. I mean, if you find an axis level with, I'd say, a 60-minute time frame onwards, you get lovely moves. And one thing just to bear in mind, our previous study was on a 3-minute, okay? And you do get, the lower the time frame, okay, you do get clean touches, okay? Higher the time frame, don't forget there's a lot of noise, or there might be stop hunts going on a large time frame. So the higher the time frames, like 60 to 120 minute to 240, which is half a day, very good time frame if you haven't used 240 minute daily or weekly. Okay, the higher the time frame, less clean the touches are going to be. But you know, this is 240 minutes spanning 6 months. You can see all along here there are lovely touches. So just bear that in mind. Excellent. Any questions? When trading multiple time frames, what time frame do you look for axis lines? Okay, I think I understand the question. Well, we do discuss multiple time frames, but okay, this, in an ideal world, this is what you want to do. Say we are trading gold, okay, and primarily the time chart we use is a 5-minute, but you do your pre-work analysis and you've noticed that gold has had an axis line that has been respected and used various times, and we've got, say, 10 touches on it. Okay, so this is a 60-minute here. So this is a 60-minute axis line. Now, say we're rallying, and you think you've done your pre session analysis before the market's open, and you think that gold, the market's telling you that gold is going to rally to the axis line. So what you do, I mean, this is how you get very good at trading. This is how you gain an edge. When it rallies, you look for the higher time frame axis line, this being the 60-minute, but you look at the 5-minute chart, and what you'd want to see would be weak buying. Okay, because we've dipped under with a valid break. We've got multiple touches, so we know the axis line is valid. So when we're approaching a 60-minute axis line on a 5-minute time frame, our entry time frame, we want to see weak buying. Now, if we see weak buying approaching a 60-minute axis line, we have, odds favour it holding. Okay, I mean, this is the secret, or this multiple time frames does provide an edge, a huge edge, but it is very complicated. But in an ideal world, we want to trade all structure. First of all, higher time frame structure, 60-minute, will always trump lower time frame structure like 5-minute or 10-minute or 15-minute, and a 240-minute structure trumps 60-minute. Okay, what do I mean by trumps? Well, it's more important. Let me just recap. So if you have a 60-minute axis line and you trade 5-minute as your entry bar, okay, if it's valid, you've got multiple touches and we're rallying and we've got a good valid break and we're rallying towards it, you want to see weak price action. Okay, now something else to bear in mind, say if we up thrust on the 5 minute and we come down, picture perfect. Okay, now you want to be using the 60-minute time frame as your exit. Although you entered on a 5-minute bar, you are using 60-minute time frame structure, and that's very, very, very important. I see people who do trade multiple time frames and they have very good entries, but they still get spooked out from 5-minute structure. And if you have a valid axis line, say on a daily, and you're fortunate enough to get in on a 15-minute or 5-minute time frame, okay, you've got a 5-minute bar using daily structure that is an axis line. Wow, I mean, that is phenomenal. You know, the trade could last days. Okay, you can't get spooked out by a little rally on a 5-minute, you know, obviously because you're short. You can't get spooked out on a 5-minute rally because you're using daily structure. If you can use daily structure and use 5-minute entry bars, you know, you'll be one of the best traders in the world. It is very difficult to do. I mean, you can do 5 minutes, 60 minutes. I mean, this is best case scenario. High time frame structure along with small time frame entries. This is it. This is elite level of trading. Not many people can do that. Okay, excellent question. Apologies for went on a tangent. I think it has answered. Excellent. Okay, brilliant. Okay, note these highs here, this strong move up, and we come back down to this support level here. Okay, just bear that in mind. So this was the strong move up, and that support level is here. Okay, this is the same chart, but obviously we've zoomed in. Now we've drawn in this red line. This is the axis line from the previous chart, the blue one. Okay, this red line will be drawn in. The importance of this chart is that we always look for levels. You know, this red line, this additional line is not too close to the axis line. This move here is, you know, is $8,000 give or take. So this between here and here is a couple of $1,000. There's room to trade, especially if you're an intraday trader. It's a lovely market to trade if you're not familiar with soybeans. Anyway, so we have resistance, and we fail. This level wouldn't be drawn as yet. We'd have, look, 1, 2, 3 touches. So as we come down here, and we have to be thinking. Now this is our job. You know, part of our job is to find areas of structure to give us potential trade opportunities. So if we don't draw it in by here, we have to draw it in by here, because we have another 1, 2, 3. So as it comes down, that this level must be drawn in. So we have resistance, failed break, resistance, failed break. Now isn't this interesting? Resistance, you know, 12, 13 touches. Now clearly this is a significant level, and isn't this interesting? Look at the force, look at the amount of buying it takes to break this level. It's phenomenal. It's a huge spread, and obviously this adds an additional level of validation. We don't really go anywhere past here, and as we come down, we'd be looking for a long opportunity, because we'd expect this has been phenomenal resistance. So when we get to this area, we'd be looking, you know, this should be support, and we'd be looking for longs. But as we approach on the first attempt, look at this selling. This is the opposite of what we want to see. If we are coming down to support, we want to see weak, narrow selling bars. That is supply. That's, you know, you don't, you don't want to stand in the front of a bar like that. Okay, you want to see the market unfold and give it time. So this bar has selling of good quality. I mean, we can see support tries to hold, but you know, we're definitely weakening the support line here, this mini axis line. We're trying to hold, and we do break through, and we do rally. But what do we notice? You know, still supply. You know, it's supply, and the rallies in comparison are choppy. So we react down on this bar, close under, axis resistance, no surprise, come down, we rally up, and look how we rally up, good strong price action, and we hold a support, we hold a support, we hold a support, we gap up, demand imbalance, we think we're going to take off, and then we get to here, we see, you know, we get a good bar here, and then price clusters. Why is it cluster? We are at resistance. Not only that, we are in an area supply, 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 supply. Okay, a little bit supply here, so it's of no surprise we come down. And so from here, free up for us, we come down, and we saw evidence of good buying, and we come back up. Now we would expect this level to hold. Enough time has passed, traders will be aware of this level, and it does hold, and we get 2 trading opportunities here. And if we do take the trade, what would be our target? Target would be the axis line, as it should act as support. It's fascinating, right? See, now we're scratching the surface of how to think like a trader, and what we're looking for, you know, structural areas on the chart. It's of vital importance. Now, there's another important lesson, should I say a piece of knowledge on this chart, is this area here. It's sloppy trading. There is no clean break. Hence, we wouldn't want to take a trade. Why? Because it doesn't offer us an edge. When we look for, you know, we want to touch, we come down, we break to give it more validity, then we come down, then we take the trade. Okay, there's no validity in the price action around here for us to take a trade. Does that make sense? It's very, very important stuff. Hopefully the pieces of the puzzle are starting to fit together, beginning to gel. This does take time, okay, but the more you use lines, the more you practice, the better you will become. So adding the additional line along with our axis line, okay, gives us additional strength or weakness, and it helps us to tell us the story on the chart. What do I mean by that? Well, if we flip back, okay, this area here and why this holds here now makes sense. Okay, so if we flip back now, this was that area where it was struggling to hold, and this is why it held. This is why we want to draw as many levels as possible. Are there any questions before we move on to our next study? No? Okay.